Well, moving on here at CNBC-TV18, we have done some research on some of the stocks that could offer value in this current market. Remember, this is purely based on research and not a recommendation for you to go out there and buy the stock. Abhishek, let's go across to you first. What do you have?
Well, Nigel, HDFC Bank is one of the good turnaround story for investors that analysts on street are saying, because it is one of the strongest stock and FII's most loved stock. The stock has fallen also on the concern with respect to its unsecured business, which is the biggest amongst peers. So you look at Macquarie's note on HDFC Bank, they have an outperformance rating with a target price of close to about 1,500 per share. They believe that the current valuations are close to global financial crisis valuations. So the retail unsecured portfolio, which is the cause of worry on street, they believe that the eventual loss given default will be on the lower side. Why? Because the bank has already done diligence on giving out the loans. Willingness of customers to repay is also very good, given the fact that their credit score has been maintained on the higher side and repayment track record has been very good. The capital position and liability profile of HDFC Bank is one of the strongest in the sector. Every 1% decline in loan growth will impact the EPS or profits by 1 to 1.5%. JP Morgan, on another hand, has an overweight rating on HDFC Bank. The target price, they have cut it down to 1,150 versus 1,600 earlier. They believe that HDFC Bank is one of the best quality play in current environment. HDFC Bank has stable margins, healthy asset quality, consistent performance across various metrics, and also superior management. JP Morgan also says that, the rural area initiatives that has been taken by HDFC Bank of late will lead to higher growth in market in future. Back to you.
Okay, all right, Abhishek. Thanks so much for joining in and filling us in with those details. Keep an eye on the market. We have moved lower. The problem is ITC, value or value trap. Well, that's a debatable topic that we have been discussing for many, many months. For the time being, the stock again has seen some selling moving to the low point of the day. But Abhishek told us what is the stock that he's covering in this value hunt. But Sonal joins us as well to tell us about another such stock. Sonal.
Thanks a lot for that, Nigel. Well, I'm watching out for IGL. Remember, the stock has already fallen 30% from its record high levels. It's down 12% this year. And there are concerns regarding volume growth that the street is factoring in. However, Morgan Stanley is saying that after they announced the plans to shut 2/3 of their CNG outlets that was operated by the dealers, which is around 74% of the total volumes in terms of CNG, they think that the volume growth should recover in second half of FY21. They say that the stock is already pricing in a gas demand decline, and that is something that they are watching out for. Apart from that, there is strong free cash flow and net cash that must help company weather demand challenges, and also rise in duty by ₹8 on liter. They have the government has capped excise duty by ₹8 per liter. That is something that will be impacted, and they have an overweight rating with a target price of ₹471 per share. Nirmal Bang, however, they have actually upgraded the stock to a sell from a buy, and they think that growth is likely to revive in the second half, considering that it's a strong growth story. Back to you.
Okay, all right. Thanks so much for that, Sonal. Well, let's move on then. And as India enters its 6th day of lockdown, the number of confirmed cases rise to a total of around 1,071. The virus has claimed around 29 lives so far, while only 942 patients have recovered. Cases across the globe are above 7.23 lakh, where 1.5 lakh people have recovered. Now, that's positive. Well, and as the crisis continues, consumer goods companies may face shortage of packaging material soon. Sources say that raw materials to manufacture labels, shrink wraps, cartons are in short supply at the moment. Priya Sheth joins us to fill us in with what she's picking up and all those exclusive details. Priya.
Well, temporary shortage of wheat has impacted India's flour millers. Now, what we do understand is that since Friday, many of the mandis have been shut, and that coupled by the late procurement of wheat owing to the unseasonal rainfall in many regions has posed to be a big challenge for India's flour millers. Now, most of the medium-sized biscuit as well as bread manufacturers will be impacted if this continues over the next 7 to 10 days. Keeping this in mind, the Roller Flour Millers Federation of India has written to the Food Corporation of India suggesting several methods that will bring some sort of relief to the milling community. Now, what they've said is that the regional offices of the Food Corporation of India should be given the authority to sell wheat directly to the millers. This is, of course, in addition to the tender-based process that they run at this point in time. They're also saying that the facility of deposit of payments should be extended to 2 weeks from 1 week at present. Now, they've also suggested that packaging material should reach to them as soon as possible because they are anticipating some sort of shortage as far as packaging materials are concerned, primarily because manufacturing units of packaging materials have come to a grinding halt at this point in time. Now, we'll have to wait and watch how this shapes up for the millers community and whether or not the government intervenes and gives some relief to the milling community at large.
Okay, Priya, thanks so much for stopping by and filling us in with all those exclusive details. But former IMF chief economist Kenneth Rogoff says that the world may be seeing its biggest recession in 150 years. Calls upon global institutions to work for forbearance on all international loans. Let's hear him out.
The reason you try to have a sound balance sheet, you save for a rainy day, you want to maintain fiscal capacity, is to use it very, very aggressively in a situation like this. This is not the time to worry about debt if you have access to markets. So I think those countries that have the capacity to have a very, very large response, give people cash payments, back loans, write down debts, help municipalities. This needs to be done very, very boldly. We're going to have a giant recession this year. The depth of the recession will look large at the high end of the 100 worst recessions the whole world has experienced in the last 150 years. I think it's a safe bet to say that the 2008 crisis made people more cautious, and this crisis perhaps more so. But, you know, there may be a silver lining in terms of finding creative ways to deal with this. I think one wants to avoid sort of overreacting. I think there'll be a lot of adjustments. And eventually, you know, we have had centuries and centuries of tragedies and deep crises, and we've moved forward. I think the same will eventually happen here.